Construction deliveries, that's going to continue to decrease because there have not been any starts of merit, not a large volume like you would expect in 2025. And so because of that, there won't be a lot of new units getting to 2026. There will be some folks with an advantage. They have entitled developments that are shovel ready and they're ready to jump in there and get to building. Maybe they come in a little sooner. But that construction deliveries is really going to impact things as they go forward. In the short term, it's a good thing, right? You have less units competing with that existing supply. It should get absorbed even at lower demand. If demand increases, then it can get absorbed even quicker. But we may repeat this cycle, right? We may build a lot of units, have to absorb them, and things slow down and sort of repetitive. Most of the forecasts are indicating a much more level delivery and absorption rate going forward. And so that's a lot of good news. Again, we have seen rent growth, be very difficult. It's not grown. It's been very flat. Some markets have done double-digit decreases. Chris, you have a lot of fun with some assets in Florida and Texas, where we've not seen, a lot of rent growth as it was originally projected out there. But we think that's going to improve. Some markets may see it at the end of this year. And even some of those distressed markets may get a little bit of a lessened trade out, if you will. But some markets are going to do really great next year. Some of it may run over into the next. Some markets may get back to 3 or 4% increases. It's going to be very incumbent on the supply and what comes into the market next. The other thing that is impacting the market in certain ways is legal changes, right? Governmental policy that we're seeing. One thing that Chris and I have been talking a lot about with some of our owners that work on the affordable space is what's sort of happening with Section 8 and the different voucher choice programs. Under the previous administration, I think there was a lot of anticipation that rents voucher amounts are going to be raised. Rents have went up significantly over the past few years, and the voucher amounts have sort of been stagnant. So a lot of people are under rent. The new administration is not going to make those changes, and it looks like they will actually. There's some conversations about potentially pushing that down, to the states to run those programs. So it's really a lot of confusion in the Section 8 program. So as that develops, we'll see how that happens. Chris, I know strategically, you've had to make some changes there for a few clients, right? Where we were
Yeah.
anticipating one thing, and now we've had to shift gears, right?
Yeah, absolutely. I think the word of the year probably in affordable and light tech investments has been uncertainty. There are a lot of forecasts, I think, last year and before, and just, they may come to fruition. There may be some things that change, but right now I think we're still in a place of uncertainty as far as that's concerned.
Yeah, and it's interesting too because coupled with some news that came out of the recent Federal Budget Act, there are some increases that should help states fund and build more affordable housing out there in that light tech space, right? So that is one reason I think a lot of people are very very hopeful for new affordable housing that you'll see a good amount of that development happening. So very very interesting that's out there. And we are seeing some different rent regulations and even some rent control in certain markets limiting increases. There's different state and local legislation, in different areas that contribute to that. And something that HomeRiver Group as a team, we because of our scale and presence where we're located, we stay very heavy on top of that. So very interested to see those changes that happen. So what is the good news, right? It's been sort of a rough year in a lot of areas that people had very minimal growth, and they sort of had several years post-COVID of fantastic, times. Most of the projections are saying that everything is going to start rebounding end of this year, rolling very heavily into 26, and most likely continuing in some markets, into 27. The timing of that is going to be different from market to market. And even if you get down to a state level, we've seen areas of Central Florida that we think will rebound, 6 months before others, right? And have different rent volumes and increases in there. And the markets are going to be very dependent on that too, right? There's some markets that have had massive amount of deliveries. It's going to take a long time for them to, dig out of this hole, at least with the current conditions. But we're recommending a whole suite of things to owners to try to take advantage of this, and investors to try to make good decisions in this time. And for folks that currently have assets out there, you know. And looking to acquire more assets or build or develop more assets, getting prepared for what's going to come next is the key thing. Chris and I, we were recently talking to a guy that's used to rehabbing, 5 homes a month, right? And he's wanting to start rehabbing 20 homes a month. Well, that's a big scale, right? How are you going to make that jump? Where are you going to get that staff? What is your plan for that? And there's a lot of those things that you have to think about. How are you going to invest? It's also time to get things organized, right? You're going to go out and look for deals. You got to think about financing. You got to think about capital. However your investment structure works, be prepared to do that, especially if you're looking to scale up, to the next level.